Yeah. Good morning, respected shareholders, directors, auditors, and others. It is indeed our pleasure to welcome all of you to the 53rd Annual General Meeting of MPS Limited. Before our esteemed chairman delivers his formal address, allow me to highlight certain key points regarding participation in the AGM. The AGM has been convened through video conferencing or other audio-visual means in compliance with the provisions of Companies Act 2013, read with circulars issued by the MCA and SEBI from time to time. The participation in this AGM was opened 15 minutes prior to the scheduled time of commencement and will remain open for another 15 minutes after the conclusion of AGM for casting votes. As stated in the notice, the company has engaged CDSL to provide a VC facility enabling shareholders to attend the AGM with participation on first-come, first-served basis for the first 1,000 shareholders. However, key speakers such as promoters, institutional investors, directors, KMPs, and auditors will be allowed to attend the AGM without any restriction. Since the AGM is being held over video conferencing, where physical attendance of members in any case has been dispensed with, a member entitled to attend and vote at the meeting will not be eligible to participate or appoint proxies to attend the meeting. However, body corporates are entitled to appoint authorized representatives to participate in the AGM and cast their votes. The registered office of the company situated in Chennai shall be deemed to be the venue for this AGM, and the proceedings of the AGM shall also be deemed to be made thereat. Furthermore, to transact the businesses as mentioned in the notice, the shareholders will be provided with an opportunity to inspect the documents referred to in the notice until the date of AGM. In addition, we have received a request from 6 shareholders for enrollment as speaker shareholders in the meeting to express their views and ask questions. With this, I now request Chairman Sir to welcome and address shareholders. Thank you, and over to you, sir.
Thank you, Raman. Ladies and gentlemen, distinguished shareholders, esteemed directors, auditors, and all present at this meeting, I am delighted to extend a warm welcome to each of you at the 53rd Annual General Meeting of MPS Limited. I am joining from Melbourne, Australia. I am informed that the requisite quorum for this annual general meeting is present. I now call the meeting to order. Before we start the main proceedings, I would like to introduce the directors, the senior management officials, statutory auditors, and secretarial auditors present through video conferencing and visible on your screens. Mr. Ajay Mankotia, an independent director and chairman of the audit committee, is attending this meeting from New Delhi. His expertise lies in accounting, tax, and financial management. Ms. Jayantika Dave, an independent director and the chairperson of the Nomination and Remuneration Committee, has wide experience in human resources and the financial services sector. She is joining us from Gurugram. Dr. Piyush Kumar Rastogi, an independent director of the company, possesses a wealth of experience in audit, financial accounting, and corporate law. He is attending this meeting from Noida. Ms. Achal Khanna, an independent director of the company with extensive experience and knowledge in human resources management, is attending from Gurugram. Ms. Yamini Tandon, a non-executive director and the chairperson of the Stakeholders Relationship Committee, brings her expertise in marketing, strategy, and post-acquisition integration. She is joining us from Gurugram. Mr. Sulit Malhotra, CFO, and Mr. Raman Sapra, Company Secretary, both are participating in this meeting from Noida. Mr. Rohit Arora, partner, Walters Chandok and Company, statutory auditors, is attending the meeting from Gurugram. And Mr. R. Sridharan of R. Sridharan Associates, the secretarial auditor and scrutinizer, is participating from Chennai. Thank you, and let us proceed with the agenda for this meeting. MPS delivered another year of unprecedented earnings results, with revenues at 501 crores, PAT at 109.2 crores, and an EPS of 63.87 rupees. 30% earnings growth is no mean feat, though what's more satisfying is our rapid progress in our journey in the last 18 months. Our Going Gestalt strategy, framed in 2021, has started to deliver robust outcomes. And most importantly, we articulated our deep purpose to help make learning accessible to all. Our deep purpose supports us in all aspects of business, including driving business outcomes such as revenue growth and margin expansion, human outcomes, including employee engagement, and building an ownership culture that finally drives customer outcomes, and strategic outcomes, including innovative launches and leading market change. MPS has impressive momentum in all of its business segments for the first time in many years. While some business segments are outperforming the others, we no longer have any laggards. E-learning has been a North Star for growth since the acquisition of TIS, a premier e-learning company that was a division of one of India's largest conglomerates. In FY23 alone, e-learning grew by over 52% in FX-adjusted revenues. More recently, what has changed is that our most mature line of business, content solutions, has developed a higher growth momentum relative to past expectations, performance, and the marketplace in general. Additionally, the Hirewire platform business has been revived since its acquisition in 2020 and delivered a steady revenue increase in Q3 and Q4 of FY23, which is expected to continue into FY24 and beyond. Our expectation heading into FY28 is that while the business mix will evolve to a point where the fastest growing parts of the business own a larger share of the pie, that the mature lines of business will also grow. The recent step up in revenue growth has led to continued margin expansion. Previously, our content and platform business segments operated in the mid-40s in margins, and FY23 delivered 39% and 35% respectively. The margin expansion in e-learning has even been more positively stark, and the business delivered similar to 23% margin in FY23, much ahead of our competitors and the marketplace. Most companies tend to sacrifice margins for revenue in their growth journey. MPS is unique and has been able to exercise this tremendous operating leverage and continue its margin expansion as revenue has scaled. We still have much room as we supercharge the scale of MPS towards FY28, with the potential of us delivering previous levels of profitability in content and platform solutions and breaking the 30% barrier in e-learning. Our 5-pronged approach going Gestalt that features a market-based approach, emphasis on star customers, investment and launch of new capabilities, a tailored strategy to acquire new customers, and a revised acquisition playbook has started to deliver. The strategy is simple in design, and the marketplace has been responsive to our new approach. At the core, we are relentlessly ensuring that the whole of MPS is greater than the sum of its parts. As always, what has been more profound has been the execution of our strategy. With all cylinders firing on the 5 elements of our growth strategy, our focus is now supercharging scale in the execution of going Gestalt. Surpassing revenues of 1,500 crores by FY28 at similar margins is a milestone that we will achieve. We articulated our deep purpose as a team in FY23, making learning accessible to all. And that's what gives us confidence as a management team towards Vision 2027. Building a compelling learning company at a meaningful scale that helps the world learn smarter. The scale that we're looking to supercharge is not the end, but the means that will allow us to deliver on our deep purpose with significant impact. In conclusion, as the chairman of MPS Limited, I'm privileged to lead a dedicated team that shares my vision and drive. Together, we shall continue to power ahead, leading innovation toward making learning accessible to everybody. With your unwavering support and trust, we look forward to building a legacy, one that democratizes learning through smart technology and immersive learning experiences. I want to take this opportunity to express my gratitude to all our stakeholders for their support and respect. And I look forward to your continued support, feedback, and partnership mindset. The notice convening this annual general meeting, dated 16th May 2023, along with a copy of the annual report for the financial year ended 31st March 2023, has already been circulated to the members of the company. Therefore, kindly take the same as read. The board of directors of the company in the meeting held on 16th May 2023 recommended to declare 20 rupees per equity share of face value of 10 rupees each as the final dividend to the shareholders for the financial year 22-23. The secretarial auditor's report and the statutory auditor's report on the financial statements, standalone and consolidated, of the company and for the financial year ended 31st March 2023 does not contain any qualifications, observations, or comments on the financial transactions or matters that could adversely affect the functioning of the company. Accordingly, there is no requirement to read out the auditor's report during this meeting as provided in the Companies Act 2013. Therefore, kindly take the same as read. Thank you, and over to you, Raman.
Thank you, Chairman, sir. We will now begin with the question and answer session from the shareholders who have registered with the company as a speaker shareholders. We would like the shareholders to be brief and concise while expressing their views and limit their questions, queries, and suggestions to 3 minutes only, so that other shareholders may also get a chance to speak. The speaker shareholder will be unmuted by the host. To start speaking, the shareholder is requested to kindly click the video on the button, enabling the moderator for you. If a shareholder can't join through video by any reason, the shareholder can join through audio mode also. Once all the speaker shareholders raise their queries and comments, I request Chairman Sir to answer or to direct the concern to answer the same. Yeah. So we take first question from Shri Ramesh S. Damani ji. Sir, please go ahead, sir.
Yes, good morning. Yes.
Yes, we can hear you, sir.
Yeah. Good morning. Thank you so much for this opportunity to be a part of the AGM. I've been a shareholder for many years, and I'd like to point out that when I joined as a shareholder, the stock price was around 50 rupees, and now you earn almost 50 rupees EPS. So it's been a tremendous journey, a lot of wealth creation. I'd like to congratulate the board for all the good work they've done and all the value creation they've done over the last 10 years or so. Congratulations on a good set of numbers. I have only one question, sir. We read a lot nowadays about artificial intelligence, and we wonder if that is an opportunity or a crisis for a company like ours. Can you just give us some color on what does artificial intelligence means for MPS? Thank you so much, and keep doing the good work, sir.
Thank you, sir. The next question is from Mr. Naveen Bothra. Please go ahead. Mr. Naveen Bothra, please go ahead. As there is no response from Mr. Naveen Bothra.
हेलो
Yes.
जस्ट ए मिनट रमन जी, थोड़ा टाइम दीजिए. नेटवर्क इश्यू होता है, थोड़ा डिजिटल मीटिंग में थोड़ा पेशेंस रखना पड़ेगा सर.
Yeah,
आपके मैं ये अप्रिशिएट करता हूँ कि 4, 5, 6 बार मेरे को फोन आया है वंशिका जी मैडम का और सेक्रेटरियल टीम से. मैं उनका अप्रिशिएट करता हूँ, लेकिन आप 1 मिनट भी वेट नहीं करना चाहते. दिस इज नॉट गुड.
Yeah,
These
sorry.
are just come to the point. Naveen Bothra, pleasure attending the 53rd AGM from Delhi. A very good afternoon to our CMD, Mr. Rahul Arora ji, the board of directors and the management team. First of all, I would like to congratulate the team on crossing the revenue milestone of 500 crore rupees and PAT of 100 crore rupees. Both are milestones in there. In our journey to be a 1500 crore company by FY28, despite all the challenging circumstances. So in a lighter vein, I would like to say, ye dil mange more. I would like to congratulate the team for various awards and recognitions during the year. Sir, I have the following 4 points revolving around the our theme of this year's annual report, supercharging scale. All the 4 questions revolve around this strategy. I would like to have the learned views of our CMD, Mr. Rahul Arora. Number 1, supercharging scale, a long way to go. Our theme of this year's annual report is, sir, supercharging scale. Further, in your letter to the shareholders, you have given a target of surpassing 1,500 crore rupees by FY28. So we are curious to know as to how we are planning to achieve this ambitious and aspirational goal, organically and inorganically both. If you can enlighten the shareholders on our strategy to achieve 3 times of the revenue of the present scale in next 5 years' time, it will be helpful, sir. Number two, Maginu, our 4th vertical. We are incubating our 4th vertical in the area of design studio for marketing and communication platform through Maginu. What will be our organic investment in this vertical? Kindly enlighten us on this vertical in detail and the prospects for this line of business in the coming 5 years' time. And also, as recently we have got the shareholders' approval for raising equity capital or funds to do inorganic acquisitions. My question in this regard for this Maginu vertical is, are we planning to do any inorganic acquisition in this design studio space for marketing and communication, sir, to achieve our supercharging scale goal? Number 3 is optimal capital allocation policy, sir. Kindly enlighten us on our capital allocation policy. On the it is quite appreciable that we are giving good dividends as also doing buyback regularly. But on the other hand, we have taken shareholders' approval to raise further equity capital. So we would like to have your views on our optimal capital allocation policy. If you can elaborate on this, in this background of dividend buybacks as well as raising of further capital, so that we have a optimal capital allocation policy for period up to 2028 to achieve our aspirational and ambitious supercharging scale goals, not only by growth but further improving our super return ratio, sir. Your views will be highly appreciated, sir. Number 4 is just my feedback or suggestion. If you can have, it will be quite helpful, sir. Physical annual investors day. It is my suggestion that since it is the 4th virtual AGM in continuity, to give a physical networking opportunity with the shareholders, HNIs or institution, etc. I would like to suggest that we can think of organizing a physical annual investors day during the course of this calendar year at an appropriate time, so which will give opportunity for the shareholders to interact with the senior management team of the company. It will also give an opportunity to the company to showcase its capabilities to the investors at large. I think this will send positive signals amongst the investor community at large, and in imagining what is MPS right now and what it can be in the coming 5 to 10 years time of the supercharging scale goals. So it's my humble request to kindly consider this physical annual investors day request. To conclude, I wish the management team all the very best in the years to come. Looking forward to meet you, Rahulji, whenever you are next in Delhi, along with our CFO Sumit ji. So I look forward to meeting you in Delhi very soon. I have already voted in favor of all the resolutions, and I also propose a vote of thanks for the board and appreciate team Raman Sapraji. Sorry for initial some hiccups. Sorry, Ramanji. Raman Sapraji and his team for physical copy of annual reports as well as joining this virtual meeting, flawless virtual meeting. Thank you very much for providing me this opportunity. Thank you, sir.
Thank you, Navinji. The next question is from Mr. Keshav Garg for and on behalf of Counter Cyclical Investments Private Limited. Mr. Keshav, please go ahead.
Hello. Yeah, am I audible?
Yes, you're audible.
Yes, so I'm your loyal shareholder from Pune, and I'm interested in understanding the business and prospects of the company. So what is the outlook for FY24 in terms of top line and bottom line? In the Q4 con call, you mentioned that Q1 started on a soft note. So how is Q1 shaping up? What is the sustainable steady state operating margin that we should expect going forward? And we had guided for Vision 2027, wherein we would be tripling our revenues from 500 CR to 1500 CR. So how is that shaping up? And I would like to understand, why is the company raising equity wherein the valuations of the company are at a mid-teen PE right now? And why are we not considering raising debt instead of equity at such cheap valuations? What is the rationale for that? Because mid-teen PE and raising equity, it does not look very prudent. I mean, I want to understand your opinion on this front. And that's all. Thank you very much.
Thank you, Mr. Keshav. The next question is from Mr. Rishikesh Kaliji. Please go ahead. Mr. Rishikesh, can you please unmute yourself and please go ahead?
I think Raman Rishikesh is not there.
He's here, sir. He's
Yes.
here. Okay. Mr. Rishikesh, can you hear us?
Yeah, am I audible now?
Yes, you're audible. Please go ahead.
Yeah, sorry. I would like to know about your future capital management policy, because as a company, we are earning a high return on equity. So at one end, we are having a very generous dividend payout and buyback policy. And then even with such a high ROE, we are still going for capital dilution. These two
So Rishikesh, we can't hear you. Okay. So we are now moving forward to the next speaker shareholder. So the next question is from Ms. Yashvi Kothari. Please go ahead.
Hello.
Yes, we can hear you.
Yeah, so this is Karan speaking on behalf of Yashvi Kothari. So I have, first of all, congratulations for good performance for the year, and thank you for providing me the opportunity. I have a few questions for basic understanding of the how the business is shaping up. So the first question is about how is the Highwire business shaping up, and if you could talk something more about the same. The second question is how we are planning to scale up the platform business. That except the last quarter, the performance has been a bit subdued in those regards. The third question is considering that we have been very successful in acquiring businesses and turning it around, and recently we have also changed our approach to acquire businesses that are already performing well. So if if you could shed some light, if you're in advanced talk with someone with acquiring a new business. And the last question is about the e-learning segment. It has been a good contributor for us, and so just wanted to know the future plans for the same. And yeah, all the very best for the year ahead. That's it from my side.
Yeah, thank you. The last question is from Mr. V. Ramasamy. Please go ahead. So Ramasamy, please go ahead.
Yeah, good morning, Mr. Rahul Arora, other board members, and my professional colleagues, Mr. Sunit Tandon and Mr. Raman Sapra. I, being the last batsman or a tail-end batsman, will get optimum full time for utilization. So there are many savings from the other shareholders, right, Raman? So, okay.
Yes.
I am Vasudeva Ramasamy attending the meeting from Delhi. Congratulations to the team on the best performance by going Get Sound. Accolades to the team on the awards and recognitions during the year. I have the following questions for our Mr. Chairman. See, investment in latest technologies, including generative AI. When the first batsman you mentioned about the generative AI, I hope we get more information from our chairman on this question. So again, we are investing, in AR, VR, XR, and generative AI during the current year. So what will be our capital budget and R&D budget for the year 23-24? Kindly indicate. Next question is on the EVA, economic added value. What is our economic added value for the financial year 20-23 after considering the opportunity cost of capital and resource? So my last point will be, non-core assets monetization. In the earlier concalls in 21, we were talking about, monetizing the non-core land holdings. So what is the current position of that? And are we planning to generate internal funds by making use of it? Kindly enlighten me, sir. So it is nice to talk to you. I have already voted in favor of all the resolutions. All the best to the team. Thank you very much.
Thank you. Now I request Chairman Sir to kindly address the queries of the shareholders. Thank you, and over to you, sir.
Thanks, Raman. So, I'll answer there was some repeat type of questions, so I'll answer them together. So, a lot of questions on AI and ML, whether it is a crisis or an opportunity for the company. So let's start with that. I think AI ML basically affects everyone equally, our customers, our competitors, and MPS. So we don't see any unequal impact on our business or any unique impact on our business. How all of this will play out will obviously be determined, with time. We at MPS are viewing it as a positive, as an opportunity, because we've seen historically whenever there's a shock to the supply chain or to our industry in general, we tend to be more adaptive than the marketplace. So at the core, we're feeling confident that we're going to be more organized and are viewing it as a positive and and as an opportunity. We have set up a team called MPS Labs, based headquartered in Bangalore. This team includes over 100 people that is focused on advancing us forward, future-proofing us, and future-proofing our customers as well. This team, has existed previously, but there's been more investment that has taken place in the last couple of years, and they've already started to make successful advances within AI/ML. I'll discuss some of those current advances and our progress. So when we look at our initiatives, we define them in 3 categories: AI/ML the initiatives that are established initiatives. And what we mean by established is that we are actually using them live in production and live for our customer base. We look at trends, AI/ML trends where things are emerging. So these are places where we are executing and using these principles with a small set of customers and not everybody. And then finally, AI/ML initiatives that are more in a pilot stage, where we're not in live production, but we are running pilots with our customers. So on the established side, we are already profiling content based on the complexity of the layout and then routing that content into different workflows. So that's been something that we've been doing now very successfully for a couple of years in live production. We have also been able to automate the editing process using the NMML framework, and also enabled guided editing. This is more for the journal side of our business. We have also started applying machine learning to composition of standard layout products. Historically, we had automated the process. More recently, we've used some of the feedback from a quality check tool, where this tool has now started to self-learn and automate and create rules on its own. So these are 3 areas where things are already live in production, and we are seeing huge efficiency gains, which we are also passing on to our customers. In terms of emerging, we are starting to structure and tag content, leveraging on AI/ML. We are starting to also assess the language within content. So like we've done for layout, we've also now looking at a language assessment, where automatically we are able to assess the complexity of the language and then route it to the relevant editorial workflow. And finally, on the emerging side, we now are arriving at a cognitive quality model. Historically, a lot of our quality QC tools were more like checklists that have been taken online. Those tools have now evolved, where they now propose additional rules within the tool to be created. So the tool is self-learning and suggesting new rules to be added, and then based on whether those rules make sense or not, we add them to the QC tool. So again, this is an emerging project with a few of our customers. We are in pilot stage in creation of alt text. We are in pilot stage in creation of content development for abstracts, summaries, assessments, and learning objectives. And finally, we are also in pilot stage in creating images and image forensics, so to detect whether there's been an image manipulation when our customers get the content. So again, overall, looking at this as an opportunity, we feel that we are more organized and more determined in our approach, and already made progress on behalf of our customers. So we are viewing this with how do we plan to supercharge scale? As I've shared previously, we expect to grow from 500 to 900, organically. So which is basically an incremental revenue of 400 crores at a CAGR of 12.5%. We expect content to grow at 10 to 12% organically, platforms to grow in the range of 10 to 15%, and e-learning to grow 15 to 25%. So that's how we expect to get the organic growth. And the balance 600 crores will come from acquisitions that we are pursuing. There was a question on Maginu, which is possibly going to be our fourth vertical. We did something in the range of 12 to 13 crores in FY23. We expect a 20 to 30% CAGR over the next 5 years in the Maginu vertical. The investment profile in this business is no different than our current setup in business. So fairly similar investment profile. There was a question, that came up on QIP and optimal, capital allocation, and that was kind of it came in a recurring way. So I like to share some context and also provide an update. So the context is we are now pursuing acquisitions of healthy companies, which basically means that they at least have 15% EBITDA and they don't have profitability issues, and companies that are growing, so at least 10% revenue growth and sustainable revenue growth, some revenue growth for over 2 to 3 year period. The qualifying criteria for us then as a potential buyer has become even more important, and the deal sizes are also increasing. In this context, we took a very conservative approach of basically arming ourselves with an enabling approval for QIP that allowed us to participate in pursuit of acquisitions that we previously did not have access to. The approval was never meant to imply a definitive raise, and perhaps we should have been better in our communication. And as an update at this point, we are actively pursuing a couple of acquisitions, and these will be funded from internal accruals. So the next 2 acquisitions will be funded from internal accruals. We will only use the QIP as an instrument of last resort to pursue a relatively higher deal size than what we've done before and what we're working on today. And if we can't fund it from internal accruals and debt. And as I've shared previously, we're comfortable raising 100 to 130 crores of debt. While I don't think it is appropriate for me to comment on the likelihood of the QIP, I can confirm that based on the visibility we have today, internal accruals would be the first lever for the next couple of acquisitions. Debt would be the next lever. And if we require surplus funds still, only then we will go for the QIP as our last lever, and also to pursue a very specific large deal, which will probably not be the next 2 acquisitions that we're looking at. In terms of redistribution, we have a very straightforward approach. We always redistribute surplus if we do not have eminent use. What does eminent use mean? That we don't have use for that capital in the next 6 to 12 months. This allows us to be focused as a management team. It also allows us to be disciplined in our approach, and we'll continue with that approach going forward. So if we do not have any eminent use, we will redistribute capital going forward as well. There was a request on a physical annual investor day. We've noted the feedback. We'll discuss with the board and I'll definitely get back to you. There was a question on, FY24. Historically, we haven't provided much forward-looking guidance. We don't plan to do that for FY24. We have given a guidance for FY28, and we believe we are on track toward that guidance. Question on Q1. Within the next 24 hours, you will have the Q1 results. In the next 48 hours, we'll also have our investor presentation and an earnings call. So request your patience for those results to be disclosed publicly, and you'll have them very soon. There was a question on margins. I think we have line of sight on 35% EBITDA margin. That's kind of our more near-term goal, with 40% coming from 40% in content, 40% in platform, and 30% in e-learning. And then again, I already provided the update on the QIP. There was a lot of questions on the platform business and how it's scaling up. Just to provide more context, Highwire was our last acquisition of the old playbook, and the old playbook was we acquire distressed companies at distressed prices. We take 3 to 5 years to turn them around, and that was kind of the approach. We were now in the 3rd year of ownership. We've already seen the last 6 months H1, H2 of FY23, we've been performing, well on the platform business. We are going to be disclosing the Q1 FY24 results in the next 24 hours. And we are transitioning now from consolidation to growth. The business is doing much better. We've transitioned from being a support/service organization to an innovation and product development organization. We are executing product roadmaps on schedule for the entire platform suite. The marketplace is receiving our new features and functionalities really well. There are also lots of monetization opportunities that will come into play through implementation projects and migration programs. We have 3 product launches planned this year in this business segment and are hopeful that these will also create new revenue streams in the long term for MPS. Our engagement with the Highwire customer base has significantly improved, with discussions underway also on cross-selling. We also have a robust pipeline of RFPs with new customers in the platform business. Overall, the platform business is gradually progressing from a consolidation phase to a growth phase. There was a question on the acquisition side. Again, can't give too much forward-looking guidance on price-sensitive information, but we have an active and robust deal pipeline. Can't comment on the details. There was a question on e-learning segment and what are the future plans. Again, e-learning is our fastest growing segment. We expect the business to grow, at 15 to 20%. We expect the MaginU business to grow even faster than that. And this is organic growth. And above that, we're also looking at specific acquisitions in both MaginU and e-learning. There was again questions on AI and how we are investing. Like I already shared, we have a dedicated group called MPS Labs, headquartered out of Bangalore, that's growing every year in size, and also give you an update on the various initiatives that are underway and progress as well. So that was the update on that. There was a question on economic value added. We of course cannot, don't have that number immediately. Happy to share that number offline. I can confirm that the ROCE for the company for FY23 was 31%. There was also a question on non-core assets monetization. Unfortunately, we have not been able to monetize some of these non-core assets. They continue to be in prime locations in Bangalore. And again, it is an area where we're looking to monetize, and hopefully we'll have an update for you next time we meet. And of course, if you have any leads for us, we would appreciate them as well. So Raman, back to you.
Yeah. So Chairman, I request you to please give vote of thanks to all the board members and panelists joining the meeting and the shareholders as well, please.
Thank you for your active participation at our 53rd AGM. We appreciate all your thoughtful questions. Your unique outside-in perspective helps us learn and improve. I want to take this opportunity to express my gratitude to all our stakeholders for their continued support and respect. Our journey together has been remarkable, and we have a tremendous opportunity here to supercharge scale. I look forward to your continued support, feedback, and partnership mindset. Once again, thank you. Over to you, Raman.
Thank you, sir. Pursuant to the provisions of Companies Act 2013 and SEBI listing regulations, the company has provided remote e-voting facility to all its members to cast their vote on all resolutions set out in the notice of AGM from Friday, 28th July 23, which ends on Sunday, 30th July 23. For this purpose, the company has tied up with CDSL to facilitate e-voting. The company has provided the remote e-voting facility to those members who were members on Monday, 24th July 23, being the cutoff date to vote on all 3 resolutions set out in the notice of AGM. Members attending the AGM today and who have not cast their vote by remote e-voting may cast their vote on the e-voting platform today. Now I formally propose to the members participating through VC to vote on the resolution and set out in the notice. The e-voting facility is now activated for next 15 minutes to enable members to cast their vote. Mr. R. Sridharan of R. Sridharan and Associates Company Secretaries were appointed as a scrutinizer to scrutinize both the remote e-voting and the e-voting at the AGM in a fair and transparent manner. The result will be declared within 2 working days from the conclusion of the AGM. The results along with scrutinizer report shall also be submitted to the stock exchanges and also be placed on the website of the company as well as CDSL. Thank you for joining. The board members and other panelists may please leave the meeting now. Thank you once again.